started to move away from that focus and that focus on short squeezes, and we started to move the focus back towards economic numbers, back towards earnings, and that's exactly where we found ourselves. As a matter of fact, markets moving to the upside, setting all-time highs in multiple different areas. The major indices, of course, biotech being another one, semiconductors being another one, and a lot of that happening as we were hearing more and more about the potential stimulus and trying to work out some of these packages that whether or not they can get those passed at the levels they are, or they're going to have to find some sort of a happy medium. We'll find out more about that, obviously, over time. The other story, clearly, of last week was that run from oil, that run from energy that just continues to go higher and higher and pressing upon 60. As a matter of fact, overnight, we were seeing above 60, but last week we were approaching 60s, and that was something that was absolutely stood out. We watched energy, materials. We also saw financials really participating on Friday to the upside, all up 1% or more. We had a volatility index for the first time in a really long time, closed underneath 20. That was something. We are easily averaging more than 40 million contracts per day, so the volumes are at a record level once again in February, and you go back to January, an amazing month as well. 43.8 million contracts we traded last week on Friday. Going into the long weekend, oftentimes you get a little bit of that, well, it's a long weekend, we're going to leave a little bit early, we're going to take advantage of that. Well, we didn't really see that, and we haven't seen much of that since we've had this whole pandemic, of course, changing a lot of the lifestyles and a lot more folks working remotely from home and all the rest of that. Now, final hour of the day, that was the final hour that we saw a lot of huge jumps, and we've seen this in the past as well. As a matter of fact, NASDAQ jumped 60 plus points in the last 45 minutes of the day. The Dow, as a matter of fact, over 100 points in the final hour of the day. Both finished positive territory. We've talked about that. We've talked about this 10-year and this move that we've seen out of that as well. That's part of the reason why we are seeing financials trade as well as they have been in the participation we've seen there. So today, pre-market, we're up about 190 points on the Dow, about 77 points on the NASDAQ. We haven't really recovered to those levels since we opened up. We opened up about up 100. We were up about 45, 50 on the NASDAQ. We've been hanging around there. As a matter of fact, in the first half hour, now right at about 9:30 last I checked, we were looking at a Dow that was up about 115 points, a NASDAQ up about 50 points. So still both off of those upper levels that we were looking at in the pre-markets, but still, nonetheless, a pretty nice start to the day. Volatility up about 8%. Trading around 21.5, so that's something. We didn't spend much time underneath 20, that's for sure. And the markets, certainly they're a little bit jittery, they're a little bit movement, but obviously the positive side of that has been these final 20 minutes, 30 minutes, 50 minutes, hour, hour and a half, 2 hours of the day where we've seen a lot of the recovery side of the markets as well. And we've seen that as a pattern, it seemed like all throughout most of 2020, and here we're seeing a little bit more of that in 2021. So today, what really stands out? Well, it's got to be energy. When I give you a list of names that are up more than 4.5%, so 4.5% or more, how about this? Marathon, Apache, Occidental, Holly, Pioneer, throw in Valero, EOG, all of those up more than 4.5%. And then when you look over and you see the price of oil, which was pushing it above that 60 level, you can kind of start to see why. We also have the temperatures that are certainly affecting things. People are really focused on all the various energy side of things right now, whether it's natural gas, you know, they're going through the whole list. And I see Brian Sullivan on TV talking a lot about this over the last several hours, and that's been certainly a focus. And it's been a focus for a long time, though, folks. If you go back to November, let's not forget, November, we were trading in the 30s on oil. We have gone up, 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 and continued this ride to the upside for the price of crude. And we've had these amazing moves in these beta stocks that I was mentioning. So outside of that, with oil up earlier, it was up over 3%. Energy was early. It's pulled back a little bit from there. Financials continue to move to the upside as well, up more than 1% again. And you've got names like, Capital One, PNC, US Bank. I've got Morgan Stanley. I got Goldman Sachs. I got JP Morgan. I got Bank of America, all to the upside, all moving really well. You know what's really moving well today? Up 2.8%, Wells Fargo. Why do I highlight that one? Because last week we had that gigantic option trading in Wells Fargo. We'd already had options in there. We had options that rolled up and they were going up to even higher strikes, and it's just amazing how fast some of these moves can be. We all talk about the 10-year. That's been a factor as well. So let's get to unusual. Let's get the heck out of here. Google trading 21.28. So Obviously, this is a name because of the price point. We do not see the same kind of activity here as we see in other names. But that being said, we've got a buyer today of 2,200 of the February. Doesn't give a lot of time. 2150. So these are just out of the money. As I said, Google was trading 2128. And now they're going after the 2150 calls. Paid $6.90 all the way up to $16. So, of course, when you've got a $2,000 plus stock, you're going to have options that are going to be very, very expensive as well, unless you're completely light years out of the money trading. These are not that far out when you consider where this stock is and percentage-wise a move, but very expensive. Feels expensive. You got to put out almost $7 all the way up to $16 to be in this. But I thought it was worth highlighting because we do not see it. We talk about unusual. This is unusual. We don't see a lot of Google trading. Now, I got an ETF for you. Semiconductors I talk about all the time. As a matter of fact, I just mentioned these semis. They pulled back. They did have that pause. They relaxed for a little while, and then all they did was go up and go to further up to the all-time highs, right? Well, what do we have today? At 237.35, 257.35. We got 9,200 of the 265 calls, but these are in March, so they do offer a little bit of time. But they're trading for $6.40. So it's, again, an expensive option. Why? Well, also just take a look. We're talking about index that's trading at 257.35. These were rolled up. We had some February options, some March options that were rolling up higher to get up to where this strike is, or from February buying a little bit of time. So we've seen some selling of some of the options to be able to roll up and buy these. That's the sign of a smart, good trader who wants to still see more upside. But as you know, ETFs are not my thing. I'm going to sneak in another ETF. I'm not going to get into too much detail, but I talked about financials, and other than energy, financials are the real deal. How about the XLF today? Just take a little gander over at the June 35 calls, and you'll see what I'm talking about, the XLF. And it'll be a little homework. I won't make it too hard on you. 50,000 of those were traded. Those were bought today. And they're spread off against a higher strike option as well. So ETFs, we're seeing it, and ETFs, we're seeing it in specific areas where we have seen some great runs of late, talking about financials, and some all-time high runs, talking about semiconductors. So it's interesting to see these ETFs. I very rarely and almost never trade ETFs, so I usually use a surrogate to the ETF to be able to use what I've got and use it that way rather than going ETFs. Why? Because I think you get more bang for your buck with individual names, and I am not a passive investor, as most of you probably already know. Folks, have a great day of trading. I got my hat on. Stay cold. Stay smart. Let me tell you something. For those that don't understand what this is really like, and I know a lot of folks down in Texas are really up for a rude awakening because of this cold and the snow and everything that's been going on in the country, and we've seen a lot of it throughout the South. I would tell you this: be smart, be safe, don't be foolish. Put an extra blanket in your car, some gloves, an extra set of, everything. Always be prepared, because you just never know. Just like the markets, you have no idea what the next level is going to be or what the next shift is going to be. So be smart and try to protect yourself as much as you can to give yourself an opportunity to be safe in that case, and be smart when you're talking about the markets. Folks, have a